One of the world's biggest banks is quietly preparing for a massive shift. Up to 20,000 jobs could disappear, not because of a financial crisis, not because of a recession, but because of artificial intelligence. HSBC is exploring a plan to automate large parts of its operations, replacing human workflows with AI systems that never sleep, never slow down, and cost far less to run. And this isn't just about one bank. Because if this model works, it won't stop here. It will spread across the entire financial industry. Stay with me, because what's happening right now could redefine what a safe job really means. If you want clear, independent reporting on how artificial intelligence is quietly reshaping industries you rely on every day, especially banking, make sure you subscribe to the channel. Because what's happening right now inside one of the world's largest banks could directly impact millions of jobs. A major global bank is now considering one of the largest workforce reductions in modern financial history. HSBC, up to 20,000 jobs, roughly 10% of its global workforce. And unlike previous layoffs driven by economic downturns or financial crises, this time the driving force is something different: artificial intelligence. According to multiple reports, HSBC is exploring a long-term plan to reduce its workforce over the next 3 to 5 years, as it restructures around AI-driven operations. This is not a sudden collapse. This is a calculated transformation, and it signals something much bigger than just one bank cutting jobs. It signals that AI is now moving beyond the tech industry and into the core of global finance. To understand why this matters, you have to understand how a bank like HSBC operates. Behind every customer transaction, every loan approval, every compliance check, there are layers of invisible work. Middle office operations, back office processing, risk monitoring, fraud detection, regulatory compliance. These are the systems that keep global finance running. And historically, they required tens of thousands of employees. But that is now changing, because artificial intelligence can increasingly perform many of these tasks faster, cheaper, and at scale. That's exactly where HSBC is focusing its cuts. Non-client-facing roles, the people customers never see, but the people who make the system work. Reports suggest these positions, particularly in global service centers, are the most vulnerable as automation expands. And that reveals the core strategy. This is not about reducing customer-facing services. It's about redesigning the internal machinery of the bank, replacing human processes with intelligent systems. Now step back and look at the timeline. These cuts are not expected to happen overnight. They are being planned over 3 to 5 years, which means something important. This is a transition, a slow, controlled shift toward a different kind of workforce, not a sudden collapse. And that makes it even more significant, because it suggests this model is sustainable, replicable, and likely to spread. Inside HSBC, leadership has already been moving in this direction. CEO Georges Elhedery has been restructuring the bank since taking over in 2024, merging divisions, exiting underperforming business units, cutting management layers, and now preparing for a deeper transformation driven by AI. At the same time, the bank is under pressure to reduce costs. With billions spent annually on wages and operations, executives are looking for ways to improve efficiency and protect profitability. Artificial intelligence offers a solution. It can automate repetitive workflows, analyze massive data sets instantly, monitor transactions in real time, and operate 24 hours a day without fatigue. From a business perspective, the incentives are clear. Lower costs, higher efficiency, faster processing. But from a workforce perspective, the implications are far more complex. Because when a machine can do the work of multiple employees, the number of employees required begins to shrink. That's the underlying economic shift. And it's not unique to HSBC. Across the global banking sector, AI adoption is accelerating, from fraud detection to customer service chatbots to automated compliance systems. The entire industry is being reshaped. Some estimates suggest that up to 200,000 banking jobs could be affected worldwide as AI adoption increases in the coming years. That's not a projection decades into the future. That's a shift already underway, and HSBC may be one of the clearest early signals. Now here's where the story becomes even more important, because unlike tech companies, banks have traditionally been considered stable employers, conservative institutions, slow to change. But that assumption is now being challenged. If a global bank is willing to reduce its workforce by up to 10% to integrate AI, what does that say about the future of white-collar work? Because many of the roles being targeted are not manual labor. They are administrative, analytical, process-driven, the kind of jobs that have long been considered safe from automation. That safety is now being reevaluated, and the impact could extend far beyond banking, insurance, accounting, legal services, corporate operations. Any industry built on structured processes is now exposed. And that's what makes this moment different. Artificial intelligence is no longer just assisting workers. It's starting to replace entire categories of tasks. And when tasks disappear, roles begin to disappear with them. But there's another side to this story, because companies, including HSBC, are not describing this as simple job elimination. They are framing it as transformation. A shift toward higher value work, a reallocation of talent. And in some cases, that may be true. As AI takes over routine processes, new roles are emerging. AI oversight, data science, automation strategy, system design. But those roles require different skills, higher technical knowledge, greater adaptability, and fewer people overall, which creates a gap between the jobs that are disappearing and the jobs that are being created. That gap is where uncertainty lives, and it's where millions of workers may find themselves in the coming years. If you're finding this kind of breakdown useful, take a moment to subscribe to the channel, because these are the shifts that will define the future of work, and we're tracking them as they happen. Now consider the broader economic picture. HSBC employs more than 200,000 people globally. A reduction of 20,000 roles is not just a corporate decision. It's an economic event. It affects families, communities, local economies, and potentially entire regions where these jobs are concentrated. In countries with large banking service centers, the impact could be significant. And because these changes are expected to happen gradually, they may not trigger immediate headlines. But over time, the cumulative effect could be substantial. Fewer hiring opportunities, slower job growth, increased competition for remaining roles. This is how structural change happens, quietly, gradually, until it becomes impossible to ignore. And by then, the system has already shifted. Now look at how this connects to a larger trend. Across industries, companies are moving toward what could be described as leaner operating models, fewer employees, more automation, greater reliance on technology. This is not just about cutting costs, it's about staying competitive. Because once one company proves it can operate more efficiently with AI, others are forced to follow. That's how industry-wide transformation happens, not through one decision, but through a chain reaction. And that reaction may already be underway in banking. HSBC's potential job cuts are still under discussion. No final decision has been officially confirmed, but the direction is clear. Artificial intelligence is becoming central to how the bank operates. And that shift is driving decisions about workforce size and structure, which brings us to the most important question. What does this mean for the future of work? The answer is still unfolding, but some patterns are becoming clear. Routine, process-driven roles are the most vulnerable. Adaptability is becoming essential. Technical literacy is becoming more valuable across all industries. And the ability to work alongside AI systems is quickly turning into a core professional skill. This is not a distant future scenario. It's happening now, inside one of the world's largest financial institutions. And if history is any guide, what begins in one major company rarely stays there. It spreads across industries, across countries, across the global economy. The banking sector is now entering the same phase of transformation that the tech industry experienced earlier, and the implications are enormous because banking touches everything: businesses, consumers, governments, markets. When banking changes, the ripple effects are felt everywhere. That's why this story matters, not just as a headline, but as a signal that artificial intelligence is moving deeper into the core of the global economy, and that the structure of work is changing with it. If you want to stay ahead of these changes, to understand what they mean for your career, your industry, and the broader economy, make sure you subscribe to the channel before you go. Because the AI transformation is no longer coming. It's already here, and we're just beginning to see its impact.